Welcome back.
Welcome.
Do you wanna do a podcast about the stock market with me?
Well, why not?
I mean, we've done a few before. I don't know if you've been keeping track.
Have I been here for these podcasts?
You've been here.
Really?
You've been induced most of the time.
Oh,
yeah.
okay.
But you've been here.
Oh, that makes sense.
Physically, but not mentally. But that's pretty much.
Well, I get blank spots, huh?
You're kind of not mentally here with me a lot of the times. It's all right.
That's very true.
Yeah. So I don't know if you've been keeping track, but this is going to be episode number 20.
Well, technically 21, but yes, 20.
But it's 20. It's 20 when these guys look at this.
Exactly.
I had such a celebration plan for this. I'm talking confetti, and there was going to be sparklers and fireworks and jugglers. We were going to have a pie eating contest. There was going to be face painting and centaur rides for the kids.
What? Centaurs?
I test rode one.
Wow.
I'm telling you.
You know where Narnia is?
It was going to be amazing. Then I looked at our budget, and it seemed our budget really didn't facilitate any kind of a 20th episode party. So I got us these Tic Tacs.
And a couple Diet Cokes, Cherry Cokes.
I'm willing to split some of these Tic Tacs with you.
Sounds good to me.
Happy 20th.
Thank you.
Happy 20th podcast.
Nice.
I think we're doing a pretty good job.
We are.
Despite if centaurs aren't real, like, what did I test ride?
I have no idea. That's kind of creepy.
Yeah.
That's scary.
We maybe should move on. I'm Cody from Wall Street Breakdown.
I'm Anthony from Wall Street Breakdown.
You're listening to episode number 20. We've been here for 21 straight weeks. This is episode number 20 because we filmed, or we recorded an episode, because nobody wants to see us on film. We recorded an episode
Yes, we did.
on Christmas, around Christmas time. And
Right.
there was no news.
No,
So we
there
were
wasn't.
basically here just breaking down a bunch of the news from the past year and what we thought was going to happen in the future.
Yeah.
But now we're back in the thick of things, but earnings is over.
Thank God.
Thank God. I mean, I don't know. Like,
I enjoy earnings. I really do.
it's an ebb and flow. It gets a little overwhelming sometimes. You're like,
Yeah.
can honestly this be enough already?
Right.
But then when it's wrapped up and I'm going through earnings and I'm able to only, bring up 6-8 earnings
Yeah,
calls
you
of
mustered
real
up a
relevance.
few,
Yeah, it's a little. I long for the days of lots of news. I hope we're going to see a busy spring. It's been slow.
I think so.
It's been kind of slow. So I'm going to let you lead this dance because you're
That's
the man
what I
in this
do.
relationship.
That's
so
what I do.
You go ahead and lead this. I'm going to have a swig of this Diet Coke.
All right.
And away we go, episode 20.
Well, obviously, we're going to start with the markets today. The markets had a killer week, didn't they?
I'm glad you got that second half of that sentence out. That first half was a struggle. You're mentally here today, kind of.
A little bit.
Little bit. We're getting you there. It's just baby steps, bro. But the market did.
Breathe.
Yeah, breathe. Just breathe with me. The market did have an excellent week. This week, like it's been having. I mean, we know we had a bit of a down February, first down month in a while for a lot of the indices, but still up week this week, back on top. Even though when you go and look at earnings again did not reflect a lot of certainty. Even though the earnings were really good, we didn't really get the kind of bump on earnings. And we've seen that through the entire earnings season. Actually, when we get to the earnings call, I've got a statistic from Bank of America Merrill Lynch about that. But overall, the markets this week continue to surge ahead. We had the NASDAQ closing at an all-time high, up 4.2% this week to 7,560. The S&P was up 3.5%, 2,786. The Dow up 3.3% to 25,335. And even the TSX was up on the week to 15,577. All those big numbers sound nice.
They do.
It sounds refreshing.
A little fake almost.
I'm glad that the market has kind of placated all their overreacting to everything. We're worried about a fourth rate hike and steel tariffs and have we reached a top? Like, stop making situations up because you want to.
They need fluff though.
I guess, but this is analysts. A lot of this is analysts from big banks that come out and make these claims, and you just wonder, like,
what are you doing?
Are you just looking to call a top? Like, is that what it is? Like, you just want to be the guy who says, like, oh, I called when things got bad.
First.
Like, things are not bad. When you look at the economic numbers, things are really good. I like that the market and the people that are invested in the market continue to push it higher because the numbers reflect while, like we said, the P's are out of range historically,
Yeah.
the numbers overall inside these companies and inside the economy reflect growth. And the growth is obviously being projected onto these stock prices for a bit of a forward trend that we don't normally see. It's a little further out in front, but who's to say that's not the new norm? Things are growing in the right direction. I'm happy with it. The markets are happy with it. I think it was a heck of a good week. NASDAQ 7,500.
Oh,
Come
I know.
on,
They're
right?
killing
Like,
it.
they're
Killing it. Let's talk about Bitcoin a bit. I heard they had a pretty rough week.
Yeah, 5 straight days of losses. Today it's up. Today it was up 6-7% when I looked at it. $9,648 for Bitcoin. Again, cryptocurrency kind of all moving in unison. Some of the more important commodities out there, things like gold.
That's better talking
It's
about.
still balling. Like,
That's
I don't
tangible.
know.
That's actually real.
Yeah, if you're tripping on Bitcoin, gold is for real balling.
For real
for
balling.
real. Yeah, 1,324. So that's up what, $3 from last
Something
week.
like that.
Still playing in that range we've been talking about. WTI crude 62.04. Same thing. 58 to 65. We're looking at it sitting right 62, 63. Not a lot of movement going around. Commodities market staying fairly stable as the markets continue to be happy. Everything seems to be good. We've had we've tempered talks of the bond market now.
Yeah.
Right. The bond market was starting to tease that 3% number. People were it's just not. The markets aren't that bad for us to start worrying about having to.
No, I don't think so.
No, we're not going over there just yet to having to.
No, that's way
Yeah,
way down
that's
there.
way down the road. Everything's still going in the right direction.
Just fine.
Just fine. In
Yes.
the right direction. That was the markets. It was a good week, even though quiet on the news front as far as companies go.
Right.
Quiet
okay.
on the news front, but definitely not quiet on the news front out of the White House. The White House
sure.
pumps out news with this
they
administration.
do.
It is news piece after news piece.
I think that Trump is doing pretty good in his administration so far. And speaking about Trump,
I mean, okay, I like Trump. Let me just.
yeah,
Okay, I like Trump. I like the Republicans. I think people know that to listen to this. I would be considered probably a Republican if I was in the United States. Fine. No big deal there. I do want to say a lot of the policies that have been aiding and abetting this economic resurgence were put in place by Democrats in an administration before this. So kudos goes to the American populace as a whole, because both sides of the aisle seem to be doing the right thing in moving that economy forward, despite the fact the deficit continues to increase and there's a few things that need to be, they need to be sorted out. And I'm sure they will be in due time.
For sure.
Including interest rates finding their way back to normalization, inflation needing to find a bit of normalization. But that's all, again, a constant ebb and flow of managing an economy, just like managing a business or managing anything else.
Oh, for sure.
You're constantly working on that. Democrats, Republicans, despite the fact Trump in power right now with his peer group, I think both sides of the aisle. Fantastic job. The U.S. economy just continues to impress.
oh, they always
So,
do.
yeah, Trump impresses me. But looking back as a non-Democrat and someone who really was pretty laissez-faire about Obama, like I didn't see him doing anything that was... He wasn't as jarring a president as you need sometimes. Coming out of a... But it turned out that maybe his much more tactical approach seemed to actually pay off in spades as well, because you find yourself coming out of that recession with Democrats in power and things turned out well. So kudos to both sides as the U.S. economy continues to roar.
Anyways, back to what I was about to say about Trump. He did finalize the steel tariffs this week. Was there any countries that were left out of that steel tariff?
Left out, as in excluded from having to pay.
Yes.
Having the steel tariffs imposed on them.
Imposed, yes.
There were a few, basically NAFTA. What he did was, as NAFTA is not figured out their arrangements yet, he's really not burning the boats at this point, right? He's talked a big game. We understand NAFTA is far down the list of priorities for the United States because the United States does not benefit from NAFTA near to the amount that the other members of NAFTA benefit from it. But you still don't need to burn your allies. Trump's an old business pro. He knows what he's doing. He's got friends. He's got a lot of friends that need these exact, these little helping hands occasionally. He's made
Right,
friends
yeah.
in a lot of high places, and there's no point in burning bridges you don't need to burn when things are already going really well in the U.S. economy. I think these tariffs are a lot more to impose on like cheap Chinese steel and stuff, as opposed to really, hunkering down on the countries you mentioned, which are Canada and Mexico.
Yes, that's
the
right.
two NAFTA countries that are also involved that have been excluded from the steel tariff. We've also heard potentially Australia, because what he did was he put a 15-day timeline on these steel tariffs. And said that, the market rallied on this news on Thursday. They loved it, right? Like, they thought it was great. He put a 15-day timeline on it. So as of right now, if you're listening to this when this is published, 10 days left till this actually kicks off. And what you're going to have is each country can individually speak to the United States, I guess, or the department that's controlling these tariffs, and kind of plead a bit of a case as to why they don't think the tariff should apply to them.
That's pretty fair.
So it's not like he's saying it's just a blanket tariff, right? Like, so while it's stirring a lot of people up, and rightfully so, because
plead your case though. Right?
People they're making a big stink about a trade war, but I think we knew this administration was taking stuff a lot more in-house, and this just continues to further that agenda. Well, big week for Trump, though. A lot of other stuff, right?
It's kind of a bad word or a bad name to have.
This tariff stuff took a lot.
Trade war.
Trade war.
That-
I got it down here with a Z. Trade wars.
Trade
with a
wars.
big line underneath
yeah.
it, right? Because they make it
That's
sound
a pretty heavy name when you say trade wars.
It's,
it kind of
it's
seems
just
like
steel.
I know.
It's just steel.
I don't know
at
why
this
they have
point.
to use that word.
It's just steel at this
It is,
point,
yeah.
right? Like they act like it's everything. And I think
I know.
the EU came back and kind of overreacted. I think we had the EU come out and basically, they didn't say per se, but I mean, I think there was the inclination that they were going to impose a 25% tariff on the U.S. on all clothing, liquor, boats. Like anything coming out of the EU, like if the steel wars, that's where I've got trade wars with the Z, like just like overreacting, right?
Way
like
overreacting.
We're just talking about steel at 25 and it was aluminum at 10.
Yes,
These are just, that's all we're talking here, right? Like it's just one individual thing. And I'm imagining what the U.S. is looking for is they're looking for a bit more of a favorable agreement that they have with some of the countries that are getting over on them on this steel and aluminum importing and exporting, and they just want a much more favorable agreement on their side. Just good business time. But they have the ability to throw their weight around, so you're going to do that and impose a little bit of a... I mean, it's not a bully tactic, but I mean, if I can back you down, I'm going to do it. I don't see why that's just the way things are. Right?
Yeah.
U.S. economy liked it. They rallied on it. I'm Canadian. I like it. Even if we weren't excluded from it, you know what? When you got the power to, swing the biggest bat, you got to do what you got to do. You're the big dog in the yard. But otherwise, speaking of swinging his big bat around, some adult actress came out and said earlier in the week that there was a bit of a deal. And this steel tariff stuff really got that swept kind of under the rug, it seemed like. At least on the financial news side of it. We stopped hearing about that about midweek, and it was steel tariff talk again. And here coming into the weekend, he's apparently going to have a meeting with Kim Jong-un. That's what we're hearing, right? Like he's actually going to sit down with the leader of North Korea. So Trump all over the board.
He's a boss.
Yeah, he's got the EU they're all feelings are they need a safe space big time somewhere that they can go and get safe again, feel good about themselves, because steel tariffs got them shook to the core. They can't handle it over there. And the adult actress she's apparently getting taxed.
That's right.
Taxed on the earnings. Never paid taxes on the earnings.
It's 130,000, I think it was.
So they're looking into it. They're not taxing her for sure, because these are just claims at this point anyways. Like obviously she's lawyered up and the lawyer has been on television and the whole 9 yards there with that.
But dumb on her part to say that.
But they're looking into it.
They're looking into it. They want their cut.
Absolutely. And they should get, business transaction.
That is a business transaction.
It's a business transaction as far as
exactly.
This president is doing an amazing job. He is,
for sure.
Yeah. He is he's covering all the bases.
Butts and taking
For all the
names.
people that don't like Donald Trump, they realize that this gentleman in his life has become a billionaire who basically does whatever he wants.
When he wants.
Lives a lifestyle that most men, I think, would probably like to emulate if they could, but they can't. And then on top of that, became president of the United States like it was nothing, and just continues to ruffle feathers like a boss. Like a boss. Yeah, not really appreciated in his time, I don't think. But looking back, I think people are going to look at Donald Trump's life as a whole and go like, what a dynamic SOB this guy was.
Yeah.
Like, it's just a little off the chain, the amount of stuff that he's touched on and succeeded in. And just, he's been, I mean, he was a TV person. Speaking of TV personalities, I got a Netflix story later about another president going to TV. But I mean, Trump's been all over the board. The steel tariffs. He makes so many headlines in the White House with what he does that he can muffle out headlines of porn stars.
Yeah, he's always in the news.
Good job, Mr.
Trump.
President, my president.
We had a lot of U.S. job numbers this last week, didn't we, partner?
I am your partner, life partner. I'm gonna crack open a beer because these job numbers are quenching a thirst. It's actually a Diet Coke.
Yes.
Yeah, it's one of these new Diet Cokes. I'm shout out to Warren Buffett and his stake in the Coke company. These feisty cherry Diet Cokes. They only come in these small cans.
Well, I wonder why that
I'd like to ask Warren, if Warren's out there listening to our podcast. Mr. Buffett, you've got feelers in the Coca-Cola business.
Yeah,
Why don't you
right.
ask, why don't these come out in bigger cans? Why can't I buy a
kinda
larger?
strange.
Yeah,
Like
well,
a 2 liter.
I guess because it's kind of a specialty flavor for a season, right? But
That is very
they're
true,
doing a
right?
really good job with this. Why not just keep it around? It's delicious.
Well, you spend like, what was it, like $2 for that? or
Something like that.
Well, you can spend $2 for a 2 liter of like regular.
Yeah, but who
Coke.
wants that regular? I like
want that, the vanilla
yeah,
cherry or whatever
Yeah,
that
no,
is.
this is feisty cherry.
Feisty?
It makes me feel
Wow.
a little feisty. That's why I have it before the podcast. I find it adds a little bit of a fire, a little joie de vivre to my character.
Yeah.
Moving right along with this U.S. jobs reports, it was excellent. It was pretty much excellent across the board. U.S. jobs for February up 235,000 versus a 205,000 estimate, blows the estimate out of the water. U.S. job cuts, so obviously there's going to be cuts just like there's gains. Cuts were 35,369. That's down quite a bit from the 44,653 in January. Cuts leading the way in the retail sector, much like usual, retail leading the way. I didn't get the numbers for what was second. I remember we talked about this a couple of months ago. We were really concerned about the cuts in healthcare.
Right.
Healthcare cuts were getting exorbitantly high. I think they were in second place at one point. I didn't see the healthcare numbers on this list.
No.
So I'm just wondering how much of those 35,000 jobs that were lost were healthcare jobs, but 6,100 of them were in the retail sector. And we know retail, especially in that time of year, seasonal work. People have obviously, they worked through that Christmas season and the Boxing Day weeks that end up taking up after the Christmas season, and then they get laid off. So that's probably where that number is, but still quite a bit lower from February to January. U.S. jobless claims, unfortunately, bounced back.
Oh, that's unfortunate,
Yeah, you know, like when I say bounce back, it sounds good, but it's bad.
Yeah.
From their 48-year low. 48-year low.
Wow.
Yeah, try to take that all in. Like every time we need to step back and remember how good the economy's doing, you take a look at benchmarks like this. The U.S. jobless claims last week, a week ago from today, just a week ago, a day in your life that you lived recently, were at a 48-year low. That's half a century.
That is,
That is, I'm not 48 years old.
No,
So that to me is a remarkable number when you consider where the economies were a decade ago. The recession that was looming in front of us, to now look at it like this and say that we're not, the U.S. for sure, to say that these guys aren't a bunch of survivors. When people compared them to Rome 10 years ago and said that, you know, like Rome did the same thing, expanded too fast and collapsed under their own power. And some people have learned from history and are not doomed to repeat it. The U.S. continues to trek forward, but we did get 21,000 uptick in the jobless claims this week, so coming off that 48-year low. So that's at 231,000 this week versus a 220 consensus. Continuing claims, though, got a nice drop after a big bounce, which is bad, obviously, from last week. So continuous claims were up, I think, 84,000 last week, down 64,000 this week to 1.87 million versus a 1.934 million consensus. So we're getting really good jobless numbers, job reports. February non-farm payrolls, which is, again, one of the big ones, 313,000 versus a 200,000 estimate. That beat by 113,000. That is a crushing estimate. That is unreal. Unemployment stays steady at 4.1%. It was estimated to actually drop to 4%, which would have been, that's unreal unemployment.
Yeah.
4%. That is unbelievable. Like, I know unemployment, for everybody that doesn't know, unemployment only takes into consideration people that are actively in the job pool. So people who have left the job market, whether you don't have to be retired, you could just be someone who decided, you know what, like, I'm going to play Call of Duty in the basement. Like, I don't care about jobs right now. It doesn't matter. Call of Duty matters. You're not in the job pool, but for people who are, 4.1% is an unbelievably low unemployment number. Great U.S. job numbers. Tell me what you see that says the things are going to turn around to the negative. Just at any point in time, when you see something that jumps out, feel free to take your cast and bash me over the head and let me know what it is, because I don't see it.
I don't see it.
I don't see it. So everybody who wants to make a mountain out of a molehill every time something isn't perfect now, I would like you to take your attention and put it on what ends up dictating how much money is spent on all these corporations that exist, which is how good the economy is doing. And the economy is doing phenomenally.
Oh, I agree.
Phenomenally. So,
yes.
Carry on, good sir.
Any other news in the market this week?
We had some ISM non-manufacturing data, 59.5 versus the 58.8 estimate. It was 59.9 prior, but still great numbers. ISM non-manufacturing business activity up over estimates at 62.8%. New orders up over estimates at 64.8%. Employment, though, down versus estimates at 55% versus 61.6%. Estimate. ISM non-manufacturing index. Chain store sales from Redbook, 3.8% versus a 3.3% gain last week. These are year-over-year numbers, but chain store sales continue to grow. They're going to be up a good number in February. That's what the predictors are. Everything looks good. I mean, and we see that in the earnings calls. If you've got a good retail store, you seem to be doing all right. If you're the Gap, if you're Abercrombie and Fitch, if you're American Eagle, you're doing relatively well. If you've got brand recognition out there, right now people have money. They remember these brands. We've talked about clothing already. Yeah. You can't go to Amazon and buy a pair of jeans that fit as good as a pair of jeans that fit inside a fitting room.
That's right.
So these companies with money in the economy are doing really well, and chain store sales continue to grow. MBA mortgage apps, the index 0.3% versus 2.7% last week. You've got the 30-year. It's 4.65 now, so it's up. So refinance, obviously, I was amazed that refinance was actually up a little bit, 2% versus down 1% last week. But, I mean, 4.64 last week, 4.65 this week. That's up, I think, 5 weeks in a row we've seen. Or we might have one stagnant, flat week in there. But the 30-year mortgage is starting to get pricey as we see inflation coming into the market. Everything's good. People have money. Yeah. Everything's coming back inflation-wise. So 4.65%, and I can only imagine these numbers for the mortgage apps are they're gonna have some off weeks now. We had so many runs where things were good when this 30-year was 4.23, things were great.
Things fluctuate, right?
Yeah, this one's starting to move up, and it's not going to move back down. There's no reason to have expectations to see that move back down. So you're going to end up seeing these numbers. It's not going to be home sales like it has been the last couple of years, which have been unbelievable.
Yes,
they have.
Yes, they have. Up here in Canada.
No. GDP now forecast. Remember how it was like 5-point-some% a few weeks ago? Yeah. Then they knocked it down to 2.8, 2.5 now. Really? So the GDP forecast for the U.S. continues to tick just a little bit lower. That 5% one, we talked about that. When it was 5%, they were out to lunch. Those guys were huffing some sort of noxious paint fumes. There was no way that's like Chinese GDP.
Oh yeah,
they came out earlier this week and said their GDP was going to be like growth of 6-point-some%. I was like, yeah, right.
Okay.
Building a bunch of ghost cities over there.
Eating paint chips.
Yeah, no doubt, right?
Yeah, no doubt.
Yeah, so that's getting a little more normal. 2.5 GDP. That's good growth. That's much better than what Canada's going on at, what is it, 1.7 or some stuff?
Unfortunately,
yeah. Something like that.
Unfortunately. Up here in Canada, speaking about Canada, the federal budget monthly job report was released this February.
Are we up here in Canada?
I think we are. Last time I checked, we were.
I don't remember where I went to find that guy with the centaur rides.
I would like to know that. Well, when you figure that out, you should let me know.
Yeah, I'm gonna have to.
I need to get in touch with this
guy. I had a little flyer left under my windshield wiper at the mall. It was strange. That was strange interaction. I have to check that out. Up here in Canada, speaking of which. That's about the only strange thing that happens is mythological stories that we tell on this podcast. Otherwise, Canada is pretty boring.
Pretty boring.
Went to a hockey game yesterday up here.
That's right.
Yeah, Oilers played. I took my kid to the hockey game. It was pretty good. Yeah, Rogers Place here in Edmonton. It was a nice arena.
I haven't got a chance to check out that new arena yet.
They really had it rocking. It was good. Oilers won. It was good. But up here in Canada, not a whole lot going on.
No.
The federal budget, that's when they sit down with their daytimer. We like to talk about daytimers.
We do.
So this is the federal government sits down with their daytimer, and they flesh out just how they're gonna, they divvy out the dollars that they're printing up. Just exactly what Trudeau's going to put all his eggs in. Yeah, exactly. So consumer spending and housing investments are slowly starting to level off, the Canadian government says, and they need to find something else that's going to help propel GDP growth. That's what we were just talking about. GDP growth is not growing at the rate that they need it to grow, and we've already got the stuff that drives it the most, consumer spending and housing investments, starting to level off, if not have already leveled off.
Yeah.
So there's really an onus put on GDP growth, needing to find some new catalysts. So the federal government is well aware of that. That was in the budget. 18.1 billion deficit in fiscal 2018-2019. That's $1 billion less than last year, 19.1. So doing a good job, Trudeau government.
So far,
finding a little bit of money here, obviously. Canada's fiscal position in relation to outstanding debt is really favorable, actually, among all the advanced economies out there. See, their debt to GDP ratio, it dropped from like 30% to 28%. So they're doing really well. Like among the G7 nations, Canada has a really good ability to go out and get loans if they need to. Like they're a company or a country that people are more than willing to put Canada on the hook for, because in comparison to the other countries that are out there, they just don't have as much outstanding debt. They don't run the crazy deficit. They run a much tighter ship, and they're obviously getting better as time goes on. So Canada, they went out and not only do they have a bit of a frugal budget here, but they've done a couple of adjustments that I don't really like. They've got no new major initiatives involved in the budget whatsoever. They're keeping not only their lending costs really low because they've got such a really good debt to GDP ratio and it's just getting better, but they don't do a lot of lending to begin with. They're not borrowing money because they're not really making any kind of new initiatives. They've actually reallocated, which is the one thing that I read that I didn't really like, $7 billion. Trudeau, I was on your side up until this part, right? $7 billion in unused infrastructure spending. So this isn't $7 billion that went bad. Like this didn't spoil. It's not eggs or milk or something. They have $7 billion. They're
just not putting it there.
Set aside for infrastructure spending. Okay, we need infrastructure in this country.
Yes,
that creates jobs, right? And that's what we're talking about in the United States. There's $300 billion in infrastructure dollars available down there. Yeah. So $7 billion that were already set aside. Have we stopped building infrastructure for eternity now? Do you know of that? Was there like a memo? Did we do a census?
I didn't get that memo.
There was a census. I remember. Yeah, I filled out the census at the door. Do you want to have the stoppage of infrastructure building for eternity?
Did you agree to that?
Of course I did.
Of course. Why
would you? Yeah, I don't want any more infrastructure going up. Right? No. I want to live in 1,000-year-old homes and go back to cobblestone roads.
Nice.
Why not? Right? Let the pavement just crack. So they took this money. It's already set aside, and this is the wording of it is what got me. They moved it into pensions for veterans. That's where they let it off with. And I was like, oh, cool.
That's what
that sounds good. Yeah, You've got me sold,
you
right?
Got me right now.
Then they moved it also into some allocated funds for Indigenous Canadians.
Okay.
And then some environmental and energy projects. We know Trudeau, the Liberals.
Yeah.
I'm wondering, I would like to see where the division of allocation was.
Yes.
I know you led off with the one that you sold me on.
Yes.
And then some of these started to sound like personal projects.
Yes, more,
you know what I mean? They weren't across the board what Canada would do with their money. This was what you and your political party would do with their money.
Yeah.
Canada as a whole would agree to $7 billion in infrastructure spending if it needed to happen now, and it was able to be budgeted in, or if we had the money like we do and we're able to work to the future for it, because we know we haven't put a moratorium on building infrastructure. So there's going to be built, right? Some type of infrastructure is going to be built soon. At some point. So I wonder if, I'd like to see the allocation of funds here, because I wonder if not the wording wasn't to get me to feel like I'm sold on it by you saying pensions for veterans.
Exactly.
And then you slip in a couple other things that all to take up how much? 50%?
Yeah, you don't
40%?
say.
It didn't say how much it was going to take up with other things that, as much as people, it may be near and dear to your heart, you might believe in solar power or the, I don't know what you would call, the reallocation of funds to indigenous people that we deem have been done wrong in some way or another, some semblance or another, right? However that's deemed. Those are more personal projects.
Oh, I would agree with
those are political view projects.
Those, our own personal projects.
I don't think giving pension money to people who you've guaranteed pensions for at any level, corporate or government, is obviously wrong. You should be doing that.
For sure.
Right? And they fought for your country, even though obviously Canada we're not really hammering down a whole lot of frontline warfare anymore.
No, not anymore.
But it's still there. But the $7 billion in infrastructure spending, it seemed like something where you're like, we're not building anything anymore? Come on, Trudeau. So they had me up until that point, and then I kind of read that, and I was like, hey, you're doing good on the deficit. Hey, okay, we know GDP growth. There was no idea for how GDP needs to grow. There was the identification of the two sectors that help GDP the most now, and there was the implication that we needed to grow other sectors further, but the other sectors were very, it's wide open. What sectors? Why don't we have dominant international volleyball, intergalactic volleyball? Something that can drive GDP. We don't know. There's no idea.
Fucking name from a hat, right?
Yeah, there's no idea. The think tank was supposed to be built at $7 billion of infrastructure money, and then they gave it away.
They gave it away, exactly.
So no think tank for GDP growth. So budget came out, liberal budget. I don't know. The deficit, $1 billion less in the deficit. That I liked.
That it did, yeah.
Yeah, but some of the other stuff seemed like it was pretty par for the course. I don't see us being aggressive enough. We'll talk about in the headlines the difference between a country like Canada and a company realizing they're floundering and how aggressiveness is something that you got to do. Canada continued this month to add some jobs back into the job pool. We had a regression of jobs last month, a really big one. After months and months and months of job growth, we're back to job growth in the month of February. 15,400 jobs were added after, like I said, a big negative number in January. But full-time positions still shrank and wage growth has slowed. It's prompted some analysts that I've heard to think that potentially the Bank of Canada may adjust its interest rate raising schedule, which is set for 3 this year as well. And again, it's just a bunch of nonsense where people are just talking about what they...
He said, she said.
He said, she said. The main part was we added more jobs in February. That January number looks a lot more like an anomaly than anything else because we have had consistent months of job growth in this country. That's one thing that's definitely doing well here is the job growth in Canada continues to pick up and people continue to have options for places they want to work. And if you want to move,
they should though,
if you want to move laterally through industries, you have that opportunity to probably make very similar wages if you want to try new career paths. Those opportunities finally are out there again in the Canadian economy.
Yeah.
So,
well, that's the end of the markets. Let's move on to some headlines. Exxon has a fairly aggressive growth plan laid out this week by the CEO.
You don't say.
I do say.
Why doesn't Canada have a fairly aggressive growth plan? Why was our budget no newer?
Prime Minister.
Yeah, or
That's the only reason I can think of it right
just
now.
wonder if we just can't sack up at some point and just run this country like we're a powerhouse. Are we not a powerhouse?
We need a guy like Trump in our office.
Do you ever think we would actually vote someone like that in here? Do you think our ideals up here, we're so whitewashed, brainwashed sheep with this idea that Canada's so friendly and that we're not like capitalists. We're more worried about helping everybody else than ourselves first. And America has kind of let the idea that selfishness is kind of okay sink in. And in reality,
I mean,
you got to help yourself first.
I believe you have to help people in country first before you start helping anybody.
And you got to help yourself first before you can help your neighbor, right? Like when those things fall down on the airplane, we've talked about this. Your airplane's coming out of the sky.
What does it say?
It doesn't matter. You could be with 50 babies. They tell you to put your mask on first. Because if you don't put your mask on, you can't help nobody else.
That's right. Yeah.
So you need to be selfish. You need to be selfish to be happy. That's the way things work. You need to get yours off the top in life a little bit. Not by running afoul of others, but you still need to choose whatever you want to call it. Personal time or whatever that might equate to people considering it to be selfish, but in reality, that's going to give you the best rendition of yourself. So Canada, I don't know if we don't have the ideals to be aggressive. We've bought into this idea that we're these Canadians that are always bipartisan about everything. We're a bunch of just do-gooders.
Do-gooders and so polite and just like pushovers. That's what you always hear.
And clearly in the...
it kind of just seems like it, right?
Yeah, when it comes to the corporate world, it really seems like we don't have a lot of stuff bustling out of the seams.
Don't though, right?
Yeah, no, it just... we haven't stepped to that next level. And we should have, because we have the capabilities, but it's like we've kind of almost bought our own song and dance. So we choose not to be aggressive. We choose to look at aggressiveness as being like a negative quality.
Right.
Yeah. When in reality, it's. I mean, you need it. Mm-hmm. It's of the utmost. You need to have alphas out there.
You have to
driving things forward.
Because what else is going to happen? Nothing.
Yeah, unfortunately, you just kind of have a bunch of people placating everybody else.
Become all soft.
Yeah, everybody's
crying.
Everybody's worried about feelings again. We're not worried about growth. So we're going to talk about corporate growth from these headlines in the form of Exxon CEO Darren Woods. That sounds like a name who gets stuff done.
Darren
This guy's the CEO of Exxon, once the biggest company in the world. Yeah. Exxon Mobil. On Wednesday, they outlined an aggressive growth plan to double, potentially triple EPS and cash flow by 2025 and boost production by 25% to 5 million barrels of oil a day. This plan projects double-digit rates of return for upstream, downstream, and chemicals. That's the three different avenues that they're in. They've approached the Greek government with French refiner Total about drilling off the shores of Crete, getting some leases for land out there. They're being exceptionally aggressive, saying that, you know what, the stagnation in the oil business and the way that Exxon has just kind of lost some of that cachet that they once had. I mean, they were at one point in time the biggest dog in the yard in the world. Yeah, before Apple took them over a few years ago, and Exxon has consistently started to move down that list, and disparity between the top and where Exxon is has continued to grow. They're expecting, and Darren Woods said this, CapEx is how you grow, saying in the past decade, $1 of capital expenditures turns into $1.20 of operating cash flow for Exxon Mobil. Their cost plan has them spending $24 billion this year, $28 billion next year, and $30+ billion a year from 2020 to 2025 to get this EPS and operating cash flow up to double, potentially triple what it is today. Exxon's share price took a little bit of a tumble. People were a little taken aback. This was very aggressive. But Exxon is letting people know that they are not going gently into the good night. No. They have got both guns full loaded, coming out, don't care, let God sort out the dead. They are not concerned. This is about coming back and coming back on top. Exxon believes that the oil business is still going to be a thriving industry no matter what. Going into the future, they're the world leader in it, and they plan on pushing. I wonder what this does to other oil companies that have been kind of just treading water. We talk about French Total over in French, and you talk about BP. There's a lot of companies out there that have just, the idea of making all these capital expenditures is daunting when you don't see oil that high, and there isn't shortages, and it doesn't seem to matter for Exxon. They're planning on amping up barrels a day. They're amping up production. They're scaling out to different areas that they've never been in, and they are spending money with the intention that every dollar in the past decade of CapEx has turned into $1.20 of operating cash flow, and they expect that to continue, and if not, get to a bigger number than that $1.20.
They obviously believe in
Darren Woods coming out swinging. That was big news this week. I thought Exxon Mobil does not get enough press for how big they really are, the impact they have on this world.
Well, 5 million barrels of oil a day, you said?
5 million. 5 million barrels. That's what they're trying to get it up to. 25% increase over what it is right now. I think that 5 million barrel a day number is projected for 2025. These numbers are projected to come to fruition 2025. But obviously, between now and then, there's some hard times as you're spending big money getting things ramped up. But they are looking to put a chokehold on that industry, obviously, as that industry is so...
this is their comeback.
Everything is so tight there now. There's no real major acquisition that a company like Exxon is going to be able to do that's going to get past regulators.
Right.
They're going to need to build from within and take margin that way. The market share is going to have to go by force. By going out there and forcibly taking it, by working harder. And they are... Yeah, early this week they came out and said, you know what, the plan going forward, shareholders, is that we plan on firmly entrenching ourselves as number one. And as this industry drives forward, we are going to be the captain driving this industry. Yeah. So, big move. Big move in the mainstream for one of the biggest companies in the world. I thought that was big news.
That is huge news. Speaking about huge companies, Amazon continuously... does a bit of everything nowadays.
Everything.
So
we talked about what haven't we talked about? We've talked about the Amazon Web Services. That's obviously the market leader there for cloud.
That's right.
We've talked about the smart speaker and Alexa and how they were, they're out to market and well out in front of Apple and Google with that. We've talked about them getting into the pharmaceutical business. We've talked about them getting into medical devices. We've talked about them touring hospitals and outpatient care recently, and they had a bit of a test program going on.
Their own delivery service.
Yeah, we've had they're talking about parcels they were trying to get on Waybills, and that was got FedEx and UPS and everybody shook up. Well, so, like Amazon, they like to get things shook up. So Amazon has the banking business a little shook up as Amazon is looking to introduce somewhat of a hybrid type of a checking account. They're trying to get a product in the works out there. They apparently have searched around, speaking to banks about either doing this on their own or potentially pairing up with a bank and having a checking account and getting into the banking business or somewhat of the banking business. And that comes the same week as we find out that they're looking for someone to lead their... It's already formed. It's just not in full operation. They have a mortgage lending division as well. And they're now looking to put a capper on that and really get that mortgage lending division off the ground as well. So, again, not crossing into any... They don't cross over that... this sector, things don't mesh over each other.
No.
Everything doesn't touch, but they do such a good job of spreading.
Yes, they do.
Just a beautiful job. They went to Brazil as well because they're everywhere. Because the Amazon.
Of course.
So they went to the Brazil, right? And they actually want to set up shop in Brazil. They've looked at a really large warehouse just outside of Sao Paulo. They've met with Brazilian manufacturers about actually being a retailer in the country of Brazil and getting into the retail side of things with plans to stock and sell products as opposed to being a third-party supplier through the internet. So they're looking into doing everything.
Yeah,
they touch on everything. They did lose one of their big employees today, though, or not today, but I think it was Thursday. I say today, like all the news happened here on Sunday. The VP of Prime, the Vice President of Prime, Greg Greeley. He's leaving after 20 years with Amazon to go over and manage the homes division of Airbnb, which, I mean, we know Airbnb is getting ready to go public.
Yes,
That's going to happen, and he's good. This guy's going to go over and manage one of the major divisions of Airbnb, obviously been with Amazon since the very beginning.
That's right, yeah.
Maybe just looking to get into something new and be able to say, look at the track record.
Broaden his horizon.
Yeah, everything goes IPO when I'm on board and things grow, right? So Greg Greeley looking to moving on to Airbnb, which is going public here pretty quickly. So Amazon losing what I imagine is one of their go-to guys. 20 years with the company and the vice president of Prime, but they're moving in so many directions, doing so many things.
It's hard to keep up.
I wonder if Amazon even notices or they don't even skip a beat.
Probably don't even skip a beat.
Don't even skip a beat is what I would imagine too.
I think so, yeah.
When you're this good, it's
well, when you're Amazon, like,
yeah, you know, as a person who walks around perfect most of the time, it's a difficult task, my friend.
Yeah.
But you just kind of get used to it. The weight of the world happens to be on your shoulders, the expectations of everyone, and you just fulfill it on a regular basis, and it's kind of nothing. Yeah, just go to sleep at night like another day has passed. Yeah. So Amazon, much the same. I can relate. I can relate.
That's good. Good for you.
Carry on. I'll see myself out.
Here's some good news. Goldman Sachs CEO Lloyd Blankfein.
Yeah, Lloyd Blankfein. Been there since Diamond went on with JP Morgan. Their whole careers are kind of in lockstep. Lloyd Blankfein with Goldman Sachs and Jamie Dimon.
Apparently, he might be stepping down.
He is.
Yes.
We've heard that he's going to.
Have, yes.
63 years old, former Harvard graduate. Obviously, been the CEO for 12 years of the world's most prominent investment bank. No question about it. Two guys are pegged for the position. There's no timeline on when this position is going to be available. I've heard as early as the end of 2018. Yeah. I've heard it could be anywhere into 2020. We talked about this before the podcast, actually. And I would imagine they have a pretty good succession plan in place for Lloyd Blankfein.
For sure.
It's Goldman Sachs.
Yeah.
You know, they know what they're doing. Two co-presidents over there, Harvey Schwartz, David Solomon, both attached to be the new CEO. So they're definitely in the running, these two guys.
Yeah.
Not a bad gig, 20+ million a year you get paid.
Gig at all.
Lloyd Blankfein, though, honestly, one of the best CEOs of all time. Came on right before the financial crisis, same time Jamie Dimon came on over at JP Morgan Chase. Yeah. Their careers are kind of in lockstep a little bit. They're really good friends. It's a fantastic story of two CEOs that really ran that banking industry. They were the strong banks.
Oh, definitely.
In the United States through a lot of that.
Yeah.
You know, there were people don't remember because you look at Bank of America, Merrill Lynch and stuff now, and you don't remember that Bank of America was trading at peanuts at one point. It was these banks that didn't need the bailouts. They took the $100 million because Paulson told them to take the $100 million because we have to show that we're working in unison, that there's a unilateral movement. Right. That everybody needs it. If we start showing that this bank doesn't need the money and this bank needs $100 billion, we start showing vast disparity and people stop believing in this bank and there's a run on this bank. So he told them, he said, everybody takes $100 billion. Yeah. Everybody takes it. And if you can pay it back in 30 days, do it. And if you don't have to pay it back in 2 years, do it. Yeah. But it doesn't matter. You got to take it to show that we're all on the same page here and we don't show disparity. But when all the cards were shown later on, years later, it came out that it was these guys, Blankfein and Diamonds, Sachs and Morgan Chase, that didn't need that money. That were the guys that went in there and just towed the company line to keep this economic system rolling along. And since then, both of those banks, phenomenal. Lloyd Blankfein, bow to the king, my friend. Down, honestly, for real.
No, that's pretty phenomenal when you think about that. Like, those are the banks that didn't need that bailout.
CEO of CEOs, this guy is.
That's nuts.
Classy. Guy doesn't look like nothing shakes him.
Oh, no,
He looks so, unassuming, like a little timid guy.
Yeah, for sure.
Little Jewish dude. He's very just chilling.
You look at him, you're not a CEO of a Goldman Sachs.
He's a boss. The guy's a boss. Dude's a boss for real. Yeah. That guy is no joke, man. That's mad respect. When that guy finally decides to write the big, I'm sure he's done. 63.
Yeah, he's 63.
You go be an advisor somewhere, help people out, do something on a board, do some stuff, philanthropy. All these guys that are just so balling out of control everybody's into heavy philanthropy. You go do something, you might have a cause, something that you're working on, right? 63 years old, made good money, going to go live it up. But when this guy finally sits down and writes that, my life autobiography that he's in on, this is one of those guys where you're like, I want to know what made you tick because you don't look like you were running a $100 billion financial firm.
No, he doesn't look like he has the kahunas to do it. He looks pretty frail and fragile, right?
And it's the opposite.
He's
all
He'll rip your face off.
He's all balls.
Yeah,
that's all he is.
Just giant balls.
He's amazing. Yeah, Blankfein stepping down. It's a big move over at Goldman.
He had a good run.
It's a changing of the guard. I don't care that you've been under this guy for a long time. Stepping into those shoes becomes almost impossible.
Daunting.
It's a task.
Every
man.
day would be stressful. Like, how am I going to live up?
I mean, these guys, like I said, the succession plan's in place. There's no question. Harvey Schultz, or Schwartz, David Solomon, these guys, they've been there a long time. Schwartz used to be really high up in the company, I'm pretty sure, even more so than the co-president position. But it's a matter of these guys, like understanding that you're going to come in and the other guy that's leaving, he's a rock star, bro.
Oh, he is.
Like you're coming in. You better be Sammy Hagar because you're taking over for David Lee Roth.
Yeah, exactly.
So it's going to be. it's definitely going to be. It's going to be interesting. But Blank Fine, that's the end. End of an era.
That's sad when you think about it. But we have a couple other headlines. CVS.
He won't be too sad. He's worth like hundreds of millions.
Oh, he's not crying.
Don't be sad for him. No. He'll get an ice cream cone or something. He'll be straight. He'll be good.
He'll be straight.
He'll be good.
CVS is preparing to make one of the biggest corporate debt offerings of all time.
All time. You got to pay for Aetna, right? And we knew that. So
yeah.
they had to pay for Aetna. So the debt sale is going to go to fund the $67.5 billion acquisition of Aetna. It's going to be, like you said, one of the largest corporate offerings of all time. It's going to be fixed and floating rate paper, with 30-year obviously being the longest term, yielding 215 basis points as of right now over comparable treasuries. So a good deal as CVS puts out $67.5 billion worth of debt. Yeah. So,
it's quite a bit.
If you're looking to diversify, there's an opportunity to get into some bonds. CVS, pretty strong company. They're definitely near the market leader, if not in that retail pharmacy business. Who knows how that plays out?
That's right.
I mean, 5 years from now. I mean, Walgreens Boots obviously way up there with CVS, so we're not going to.
That's very true.
But CVS moving into a whole nother sector with the purchase of Aetna. So, I mean, CVS is diversified well enough that if everything goes just according to plan, it doesn't just, it doesn't have to blow up and go nuts.
Right, yeah.
Just according to plan, this debt's going to be fine debt. This will be fine debt to own. CVS, $67.5 billion in bonds, fixed and fluctuating. It's going to be out there. It's going to be available very, very shortly. If it's a good way to diversify, man.
No, very true.
I'm telling you, right? Like just a nice little bit of income there, paid off that yield all the time.
Yeah.
And I would think that CVS debt rating is pretty strong.
Oh, for sure. I'd agree so too. Was there any other news in the headlines this week?
Other news. There was a bunch of other news, actually. Rogers and Bell up here in Canada have decided to raise their internet plans based on cost of network investment. So I guess they spend a lot of money every year trying to upgrade this infrastructure.
Right.
And they are going to they're going to tax you for it.
No.
Yeah.
Why?
Well, I don't know. Do you have Rogers or Bell? I have Shaw. Internet. So.
Oh yeah, I know. I have Shaw Internet myself.
Nana boo boo to you.
Yeah.
You're not getting no money from me, sir. Rogers gets enough money from me. Rogers.
Yeah, they do.
Highway robbery. They come through once a month and club me over the head, take a whole paycheck off of me.
I know, they're mean.
Yeah, Rogers. So Rogers is raising it $8 a month. That's going to start on Monday. Bell's raising it $5 a month. There's no timetable on when that's happening. Maybe it's already happened, but only $3 a month if you live in Quebec. So, there's always strange. Taxes and everything are always strange. Something, We've built in all sorts of weird things here in Canada.
Yeah.
We don't know what really is going on. Everybody gets special treatment up here for some reason or another.
Yeah, definitely do.
Yeah, we do a lot of special treatment projects.
I get no special treatment.
You don't?
I don't.
I think you're special. I give you some treatment.
You do.
Yeah, I treat you poorly. That's treatment. That's treatment. Come on now.
That's true.
Come on now.
Thank you.
That's
I feel
treatment.
better now.
That's some treatment.
I feel better.
Yeah. That's not biased treatment. No, that's totally unbiased. I treat you poorly because you deserve it.
Yes, that's true.
So data consumption in Canada, though, for these companies, just to justify it, up 26% from 2015 to 2016. So that's cost them a lot of money for all that extra data that's being used. Bell said they spend about $4 billion a year on network improvements already. So some of that money's got to come back somehow. 5G's obviously coming online. We're getting wireless internet. I mean, that's going to come a lot later in Canada than it's going to come in the United States, which we see coming right around the corner here.
Yes.
But in Canada, the prices for internet for Rogers and Bell customers are on the rise. In other news,
Other news.
Would you like to hear some other news?
Yes,
Sony. Sony doing pretty well with this PlayStation business.
Yes.
Sony doing decent with a couple of different things, actually. So
Ooh.
Sony's actually been doing really, really well. The share price has been up phenomenally over the last couple of years. I think they made the most money they ever made last year. Sony doing really well. They're in prelim talks right now to acquire a majority stake in EMI. They already own 40%, owned by Abu Dhabi Sovereign Wealth Fund, who's looking to sell and cash in on the fact that there's a lot of money right now in streaming music. So they own 60% almost of EMI. They're looking to sell that off. Sony looking to get the majority stake and own basically all of EMI, who own 2.1 million songs. It was a $4 billion estimated price target. That's what we're talking about. I would make Sony the world's largest music publisher. And when you consider that Sony gets all this money from the music publishing from companies like Spotify, from subscribers, you then take into consideration that Sony owns 5.7% of Spotify, and then you think if they own the EMI catalog entirely and Sony's catalog entirely, EMI used to be one of the four biggest record labels in the world with Warner Brothers and Universal, before Paramount, before EMI got broken up and Paramount became the number 4 one. So you've got these companies. Sony they're gonna rack in the money. I mean, they've got music that's on the iTunes platform, Spotify, which they own part of, and Google services. I mean, they're out there, and they are gonna own an exceptional amount of historical music in their catalogs, the biggest amount that any music publisher's ever owned, and by a long shot. This is a big move by Sony.
That is pretty big.
This is, the music business has continued to actually improve, make more money in the last couple of years than it did for a long time, as people continue to subscribe to these services and buy music digitally. So this might be actually a really smart move on Sony's part. Just getting the old catalog, not so much the artists you have on the roster now, but just getting all that old catalog. There's a lot of stuff in the rearview mirror that sell incidental amounts of records every year just because of the nostalgia factor.
Yes.
So that might be a really good idea, right? Intel is trying to buy Broadcom. So you know Broadcom's trying to buy Qualcomm, Qualcomm's trying to buy NXP, so now Intel's trying to buy Broadcom, but if Broadcom's going to buy Qualcomm and that goes through, then Intel's basically said they've already looked into trying to usurp that by buying Qualcomm out from Broadcom, but what they really want is Broadcom, but Broadcom wants Qualcomm, but Qualcomm wants NXP. And I want to break from these stories.
I would applaud you right now for getting that out, but I can't because I only have one arm.
You only have one arm.
I will give you a pat on the back.
But that's the way that goes.
Yes.
Yeah, that's the way that story goes if you're really breaking it down. So what happened is Intel, the world's second largest chip maker, is keeping their eyes on the proposed deal between Broadcom and Qualcomm for $117 billion. The acquisition would make the potential for an offer from Intel. They said if Broadcom goes ahead and purchases Qualcomm, they're going to make a competing offer to buy Qualcomm. Right. But if Broadcom doesn't buy Qualcomm, then Intel's actually interested in owning Broadcom.
Right.
They're interested in getting bigger. They've got the money to do it. They want to get bigger by buying one of these big companies.
Yep.
So Broadcom, currently valued at $104 billion. This is coming from the Wall Street Journal, right? So this isn't coming from nobody. So this is the Wall Street Journal reporting on this. Earlier in the week, though, the U.S. Treasury Department ordered a 30-day postponement for the Qualcomm shareholder meeting that was supposed to happen at the beginning of last week. It's now set for April 5th because the early indications were that Qualcomm would lose majority control of the board of directors as people voted in the guys that were appointed by Broadcom. The shareholders were going to appoint those guys.
Yeah.
And they thought, the U.S. Treasury Department, I guess, thought all hell's going to break loose. This is going to be a scene. And now as this scene starts to, they get a hold on that and postpone that and try to help Qualcomm get their ducks in a row, at least with their shareholders before this happens. Now you end up finding out that no matter what happens, it sounds like a ninja version of Intel is waiting in the shadows to strike something.
Stealth.
It doesn't matter what it is, just depending on what's going to happen. Intel's going to come for something. Yeah. They're coming. Yeah. And they're big enough to make a move too. This is...
What a plot twist with this Qualcomm
and Broadcom. It is
Broadcom.
days of our lives in the semiconductor industry.
It is.
Unbelievable. So yeah, for those playing the home game, that is, Qualcomm wants to buy NXP Semiconductors, but Broadcom wants to buy Qualcomm. Qualcomm doesn't want to be bought by Broadcom, but their shareholders apparently do. But now Intel, who wants to buy Broadcom, but will buy Qualcomm out from under Broadcom if Broadcom gets the shareholder approval from Qualcomm to buy Qualcomm. So Intel will buy Broadcom or Qualcomm, depending. Qualcomm still waiting to buy NXP Semiconductors. Broadcom trying to buy Qualcomm. Shareholders apparently on board. That's the story as it looks on paper.
Yeah. That's it.
Simple.
It's not confusing at all.
When you've been following this every day, it seems like for months now.
Months.
It actually comes out quite fluid.
And now they have another side that just came in. Intel.
Intrigue.
The ninja in the night.
I like it.
Me too.
I like it.
When you told me that today, I was like, what?
I like
really?
it. Maybe Texas Instruments will get in on this, or AMD or Micron, who knows? This could become a whole semiconductor Royal Rumble what are we even trying to acquire at this point?
I don't know.
I don't even know.
No idea.
I know someone wants NXP.
Yes.
Right?
Yes.
Qualcomm wants them. But all that other stuff is so convoluted. Like,
yes.
Broadcom wants Qualcomm.
Yes.
But the U.S. Treasury Department doesn't want that. But Intel wants Broadcom, and shareholders from NXP want, or from Qualcomm want Broadcom, but Qualcomm doesn't want Broadcom. Yeah.
Intrigue.
I'm telling you. What a web we've woven here in the semiconductor sector.
I can't wait.
Disney, James Pitaro is the new chief over at ESPN, the former lead of Disney's consumer products and interactive media division. So consumer products, do you think Disney Store, think the stuff they sell at the parks,
right? Yeah.
Think all that stuff, consume the DVDs, all that stuff. And then on top of that, interactive media. So a ton of stuff. This guy has managed a lot of stuff, is going to go over and be the new chief at ESPN. We heard John Skipper step down in December after being there for a long time, has some personal problems.
That's right, yep.
Whatever those personal problems were, was something.
It was something from
Tide Pods.
Yeah.
Just
Tide
eating
Pods.
Tide Pods.
Vaping Tide Pods.
Yeah, vaping Tide Pods. Exactly. Riding centaurs. Racking up centaurs fees.
Exactly.
Yeah. That guy's been jousting with centaurs.
He started the Tide Pod thing.
Yeah. He's feeding the Tide Pods to the centaurs. Gold-plated Tide Pods. They're wondering why the price of gold isn't moving. So this guy's going to go over. ESPN's been struggling for years. This James Pitaro's leaving a cushy job where he is raking it in, and in a division that's killing it for Disney, to move over to run ESPN.
Going to the trenches.
It's a sinking ship. Going to streaming here pretty quick. ESPN going to try to figure it out, but I mean, they've been cutting people, and there's been all sorts of stuff. It is not as friendly over at the ESPN brand as it once was 5 years ago, let's say, when they were valued at an exorbitant amount of money. They were looked at as the future of sports broadcast. I mean, they were for 20 years.
Oh, yeah.
And then just all of a sudden, the guys over in Bristol, Connecticut, they fell off a cliff at ESPN.
I wonder what happened.
It's, I think it's just TV, just too many channels.
Internet,
It costs so much money to buy the broadcasting rights for a lot of these things, and the amount of people watching it just isn't there, and ad revenue's not the same.
If you just want to get the highlights, you go online and look for the highlights instead of having to sit down and actually watch the show.
Go on Instagram and check the hashtags, and you can see the highlights.
Exactly.
The former chief, George Brodheimer, the former chief of ESPN, is a guy that's been in charge in the interim since John Skipper stepped down for the Tide Pod eating problem. Shareholder meeting reelected all 10 of the board members who ran for another term at the shareholder meeting that Disney had this week. So a couple board guys didn't run for another term, but all 10 that did were reelected easily. A couple shareholder proposals were turned down by Disney. They wanted a little more transparency on some proxies. That was turned down, and another thing was turned down. There you go. So this James Pitaro, taking on what I think is a pretty daunting task of running ESPN as they move into streaming. But I would imagine Bob Iger at Disney still has a finger on that.
Oh, I'm sure.
Yeah, he's got the thumb over top of that for sure.
Definitely, yeah.
BlackBerry up here in Canada is suing Facebook.
They are.
They want Facebook. They say Facebook is causing patent infringement on their intellectual property. The technology used in their messaging across the Facebook network, that's WhatsApp, Instagram, Facebook Messenger, all that stuff, is belongs to BlackBerry, doesn't belong to Facebook. They said they've had years of dialogue with Facebook, trying to rectify this, trying to get licensing fees for this, trying to get royalties, trying to get Facebook to buy the actual intellectual property that they own. Facebook basically snubs their nose at them. They're a big company. Apparently, this is the rumor. Apparently, basically thinks they can bully them and say, what are you going to do to us? BlackBerry said, it behooves us, that's right, behooves us for our shareholders to go out there and sue Facebook and say enough is enough. They want basically all this stuff taken down. They want across the entire network. And what Facebook said was BlackBerry used to be an innovative company. And since BlackBerry doesn't know how to innovate anymore, BlackBerry's decided to come out and tax the corporations that do know how to innovate in 2018 technology. Shots fired.
Shots fired.
That's going to court.
Yeah.
You're talking a lot of smack when somebody's telling you you've been touching our intellectual property, using it knowingly, and having dialogue with us about it. And then when we come out and say, look, you got to give us ours for this, finally,
exactly.
We've been letting you slide on this. You come out and basically say, like, you don't know how to innovate anymore, so you're trying to come take mine. It's like, dude, you're using my stuff.
Exactly, yeah.
Right?
Yeah.
So this is getting nasty.
That
Facebook,
is,
just imagine how many lawyers they got a retainer. If AT&T has 700, Facebook has, they all have your Facebook.
Oh, exactly. Exactly. That's the worst part.
Yeah. So that's getting heated. And speaking of AT&T and the Department of Justice, more shots fired. Shots fired times 2. Pre-trial briefings have come out for what's this merger between AT&T and Time Warner, $85 billion. Says there is no fact-based evidence in what the Department of Justice is trying to block, saying that vertical mergers shouldn't be blocked unless factual evidence of competitive harm can be shown. Basically saying, you don't got nothing, bro. Yeah. You're just talking a bunch of stuff. Yeah. And you've actually had a government economic expert come out and determine that the merger of AT&T and Time Warner, which was the big caveat of it all, was how much it would A, raise the price of TV subscriptions for people, and B, it would allow AT&T, Time Warner, and Comcast as separate companies to own so much market share that the markets that they were in, they could really start drumming up prices because it would be unfair competitive conditions. That's true. And the customers would pay more. This government economic expert came out and determined it would only raise pay TV subscriptions by 45 cents a month. So you're going to have to show some facts when you go to court, is what it sounds like. Because I agree, vertical mergers, where it's two companies getting together for the betterment of everyone, the companies, the shareholders, the employees, all of it, shouldn't be blocked unless there's actual factual evidence that there's competitive harm going on, that we're going to then change the way the marketplace does business. We're not, I don't think. I think we're just adding more content under one umbrella. If you need them to sell off a couple of assets, I'm sure they're willing to do that to make this work. Yeah. But AT&T is staunchly going to court with the Department of Justice saying, you know what? You're going to have to stop singing it and bring it. Because our lawyers are coming 700 deep, you got 30. You ain't ready to roll on us with this stuff that you're bringing to the table now.
For sure. It's definitely looking good for AT&T, I think.
They're not backing off.
Oh, no, they're definitely not. No.
So we're talking about presidents.
Yes, we were talking about
presidents on television, like the president of the United States right now. He's fired a bunch of people on television, prime time. There's another president looking to come to, let's say, a semblance of television, because you could watch Netflix on your phone.
You could.
But apparently, the Obamas are in negotiations with Netflix to have somewhat of an original series.
My Presidential Wife?
I have no idea. Apparently, they also were in negotiations with, I believe it was Amazon and somebody else, but apparently it's Netflix that the negotiations have kind of narrowed down to. I'm not sure what it's going to be. It's obviously going to be something about them. They do drum up a lot of interest. People really like the Obamas. I could see this being a real coup for Netflix, depending on how much money they have to pay and how much it just costs to deal with all the security
Oh, I can imagine there's like Secret Service.
We're talking about someone who was just president in an era where, I mean, everybody knows you. You're very visible.
Yes, yes.
So, I mean, I would imagine there's a lot of red tape to getting to this guy on a real level.
Yeah.
To just watch him walk around the hallways of his house is probably just him and Michelle, the kids, and a couple of guys with Mac 10s.
Oh, for sure.
Yeah, it's probably not going to be a lot of cameras unless there's a whole lot of wiggle room as far as what they consider safe and not.
Right, because they'd probably have like a crew that would follow the camera crew around, right? You would think.
Yeah. So I don't know what it is, but in negotiations, Netflix on the up and up this year, they're moving 50% upside in 2018.
Right,
Their subscribership's growing. This obviously going to give them a real mainstream bump.
Yeah.
Reed Hastings, the CEO of Netflix, also came out this week and said he expects that there's going to be about $15 billion in subscriber revenue in 2018. So,
wow,
growing really well. Netflix doing that's without raising prices too much.
Yeah.
They went up a little bit. They went up a little bit last year, but
Netflix killing it though.
15 billion. A lot of original programming. Netflix is really good. They're losing Disney. You know what I noticed? My wife pointed this out on Friday. She sat down to watch some Netflix and pointed out there was a couple cartoons and stuff that were really being pushed, like on the front cover of the thing. She's like, they're really pushing this stuff. Like it's been on here for a couple of days, like all the time on the front. And I was like, you know what it probably is they're probably trying to hedge as much family content as they can because they're losing Disney.
Right.
So they got to get some family content and drum up interest and keep people making sure they understand that Netflix still has a good selection of family content, even though they're going to lose a lot of that Disney stuff really quick.
Yeah, because there's a ton of Disney stuff on Netflix, like all the Marvel movies, all that stuff.
Oh lots of stuff. So AT&T, speaking of them, we talked about them in the Department of Justice. Them and Verizon, they're already big winners in the Trump tax reform. They're also going to see bigger cash flows. $3 billion for AT&T, $4 billion for Verizon, says analysts over at Moody's. So just more money for the telecom companies that have been getting crushed. They're paying tax rates like near 50%, and they're going to, with this new tax reform, corporate tax reform, it's going to end up being a lot cheaper than that. So more cash windfalls, giving them more cash to operate, getting 5G online a lot quicker. The government's obviously, they're speeding that up. They've got meetings next week for 5G with the committee that's doing that. To try to speed up the actual spectrum auction to get that stuff up and running. They want 5G out there. Obviously, America is frontline about technology. It is time.
Everything now.
It's time to get it now. Boeing, we talked about this last week, how Hawaii Air had canceled an order for Airbus planes and was going to announce an order for Boeing. They did it. 10 Dreamliners, $2.82 billion, purchase rights for another 10. So good news for Boeing.
Yeah.
And bad news this week for Boeing. It didn't affect anything. There's no such thing as bad news for Boeing.
Of course.
Boeing has missed a deadline again for their KC-46 refueling tanker. It's for the Air Force.
Right, okay.
Yeah, so they're already 14 behind schedule. These were supposed to be delivered in August of 2017 was the original delivery date. It's been pushed to spring of 2019. There's been a $1.9 billion charge that they've incurred in relation to program delays. This will cost taxpayers no extra money. This is costing Boeing the money, not taxpayers. Obviously, them and the Air Force still working towards it. This also includes not just the refueling tankers that are going, but also a couple of spare engines and some wing accessories for the actual fueling and all that kind of stuff.
Right, okay.
So a whole bunch of stuff involved in this. Obviously, a very big purchase for the Air Force. You want to do it right. There's probably a reason that things are delayed. These are probably very top of the line. This is you're probably you're not buying middle of the road stuff when you're loading in the sky the planes
Tanks
from the U.S. Air Force.
Fuel,
So I would imagine while Boeing is incurring some charges on this, that the U.S. Air Force is more than okay with waiting until the best in the world gets things right like they always do.
For sure, yeah.
So a little bit of a delay, a little bit of bad news, but really hard to blame what I think is probably, it's got to be one.
It's called for.
It's got to be one of the best manufacturers in the world, right?
Oh yeah, for sure. Yeah.
Better than John Deere or Caterpillar, I would say so.
I would say so, yeah.
Best manufacturer in the world.
Yeah,
Boeing.
probably. Yeah.
Better than Ford, Toyota. It's Boeing.
It's Boeing. It's Boeing.
It's Boeing. So yeah, best in the world at what they do. Gonna have to wait, Air Force. That's just the way it is.
Well, that wraps up headlines. Let's do some earnings.
Okay,
we have
so
a couple of them. So,
Bank of America Merrill Lynch came out this week and said, the average. They didn't give a time frame, but the average of companies in earnings season, or when they report earnings, but it's earnings season most of the time, obviously. Very few companies report outside of the season of earnings. When you beat on top and bottom numbers, so you beat on the top number, that's your EPS. You beat on the bottom number, that's your rev. And when we say beat, you beat analyst expectations. 1.6% is the average those companies gain in the short term after that beat, top and bottom numbers. Through this earnings season, despite the fact that things have been up exponentially. There's been great earnings, great economic indicators, and we've talked about this a couple of weeks now. Earnings almost need to be immaculate before they're giving their justification.
Yes, that's right.
Bank of America Merrill Lynch says through this earnings season, you beat on the top and bottom numbers, you're only gaining by half that at 0.8%. So there's a significant drop-off. Historically high PEs. People are still very trepidatious about pushing things even higher, even with really good earnings. And I actually seen that in a lot of the earnings this week. We had a lot of earnings where companies were down going into earnings, where people were already expecting that even a good or semi-good earnings call was going to end up either plateauing that number or dropping that number even further. But we actually had a bunch of companies with good earnings calls drop going into earnings and then bounce back. So that was actually nice that there was people out there in the market willing to co-sign a good earnings call. Target reported earnings, $1.37 missed by a penny, $22.77 billion beat by $240 million. That number at Target, the revenue's up 10.1% year over year. Target closed the week at $70.49, down a little bit from the earnings call, but comparable store sales up 3.6%. That's what you're looking for when you're a retailer. Comparable store sales, again, any store that's been open over a year that's in your network of stores, and the growth is 3.6 versus 3.4% estimate. Gross margin of sales, unfortunately, dropped 40 basis points on a cost of digital fulfillment. So going digital, selling things online is costing Target just a little bit more and causing Target to lose just a little bit of gross margin of sales. Traffic up 3.2% in-store and online, and digital sales continue to grow, up 29% at the Target brand.
Nice.
So it wasn't the greatest earnings call, but they're definitely staying the course. As we saw, Walmart didn't have the greatest earnings call either.
True, yeah.
This is actually comparable to Walmart's, quite a bit better because Walmart was a pretty significant miss. Dollar Tree, $1.89, again, like Target, missed by a penny. $6.36 billion in revs, missed by $30 million, but that revenue number up 12.8% year over year, so growing in the revenues quite significantly as they grow in the amount of stores they have out there. Dollar Tree closed the week at 9270. That number was down after the earnings call. Like I said, store count up 501 year to year to 14,835 Dollar Trees. That is a lot of Dollar Trees.
Yeah.
I'd like to have just one Dollar Tree.
No, me too.
Yeah, I would water it and take such good care of it. I would only pick the tree.
Tender love.
Yeah, because I mean, how else do you go make it rain at the club if you don't have dollars?
Exactly.
We don't even have dollars here in Canada,
No, we
so I'm
don't.
going to need one of these American Dollar Trees. So if anybody out there knows where you could get one, you just send me the seeds and I'll
do the rest.
I'll do the rest. Yeah, don't you worry. I'll till the dirt and all the good stuff. I'll find someone to do it. There's got to be some sort of migrant worker looking for some sort of a quick turnaround. I've got a few bags of bottles I could parse off. They can get this Dollar Tree growing. So Dollar Tree, like I said, up 501 stores year over year to 14,000. So that's where you see that revenue number growing 12% because just the amount of stores out there, right?
Huge.
Same store sales are growing as well, 3.8%. Gross profit rate up 90 basis points to 33%. So they're growing the gross profit rate. Retail selling square footage is up 3.7% in total to 116.6 million square feet of retail sales space for the people at Dollar Tree. Like I said, I just need one of these Dollar Trees. I'd prefer if they were $100 trees, though.
Yes.
Instead of dollars.
Yeah.
I feel like even in the club, it's gonna have to be some afternoon donkey for the dollars. I'm gonna need. How about we break it even at 20s?
Yeah, 20s.
Yeah. Come on.
Maybe a couple reds, maybe 50s.
Well, yeah, I'd prefer the American money. It's American company.
That's right.
Imagine they're making American Dollar Tree seeds down there.
Oh, for sure.
I don't want this Canadian funny money.
Yeah.
You take the hit on the money. I'll take the American. Send the seeds my way. Abercrombie and Fitch, we talked about retailers doing well. Same store sales doing really well. Chain store sales doing really well. Abercrombie and Fitch $1.38, beat by 28 cents. We saw Abercrombie and Fitch earlier today.
We did.
When we were at the mall, didn't we?
Yeah,
There was a lot of
couple jokes about it.
There was a lot of tangerine-looking cabana wear there.
I think that's all they have. There's like cabana wears.
It didn't look like yeah.
Wasn't my ripped jeans and scarves.
Yeah, wasn't my kind of store.
No,
I didn't feel like I would be a authentic version of myself. Prancing around in a lot of khaki shorts. But people like it because they beat EPS by 28 cents. 1.19 billion in revenue, beat the street by 30 million. That revenue number up 14.4% year over year. U.S. sales up 13%. International sales up 20%. Abercrombie and Fitch took a nice bump off the earnings call, closed the week at 22.30. Comp store sales up 9% across the brands. That's versus an 8.4% estimate. And the brand that continues to grow comparable store sales under the Abercrombie and Fitch brand is Hollister, like it has been for many, many earnings calls now. Hollister, which actually does have some nice clothes over at Hollister. Much more our style. Hollister continues to grow 11%. Broun Forman.
Yeah.
You know anything about Broun Forman? They make Kentucky bourbon, my friend. Right. Jack Daniels. They also make Finlandia vodka. 44 cents. Beat the street by 3. $878 million in revs. Beat by 7.85 million, but that number is up 8.7% year over year. They were down going into earnings. 55.05 to close the week. Up after the earnings calls. Net sales of liquor plus 9% because we love getting drunk.
Yeah.
Or maybe they're just spacing out their drinking during the week now too.
Oh, of
just
course.
Getting an extra 9% in during the week, right?
Yeah.
Like a shot and a half on Tuesday. Did you hear Roseanne's coming back?
March 27th.
You heard that, eh?
I heard about that.
I was just thinking, drinking during primetime TV or something. I don't know when people do drinking.
No,
I imagine it's when they make it rain.
Probably,
I'm still waiting on the Dollar Tree, so I'm gonna one step at a time before I get to the drinking. Yeah. But Roseanne, my wife was showing me this just to get off track entirely.
All the original cast members are back.
Well, there's a couple dead people. The dead guy's not coming back. There's one dead guy.
There's a dead
guy?
Yeah,
he's not coming back.
Probably not. No.
The Becky's husband. Yeah.
Oh, that Mark dude.
Yeah, he's not coming back. Unless he's a zombie.
That'd be. Oh, what a plot twist for that show.
What a plot. Well, Dan's dead. Right? Dan died.
Oh, yeah. Wasn't it like...
He died in the last season, and she had like the... Wasn't it like a hallucination?
Yeah, that they had all the money.
Because they say in the commercial, she's like, aren't you dead?
Yeah.
You know, like, everybody always thinks I'm dead. I love John Goodman. I like Roseanne Barr, too. Yeah. Like, Roseanne was a great TV show when I was young. And those two...
I watched it, like, all the time.
I'm not a TV guy. My wife mentioned that. I just thought I'd bring that up. I know you're a TV guy, and I was thinking... I was looking at Broun Forman's net sales and thinking about drinking during prime time during the week and thought, hey, Roseanne might be a good time to start that.
That's very true.
I might get myself a bottle of Jack Daniels and just tie it on Wednesday nights. What night's it coming on? Do you know?
No.
Is it on ABC like it used to be?
Yeah, I think so.
Really? So I guess they still own the rats. Disney, right? ABC.
Oh yeah,
that's Disney.
Yeah.
Roseanne, Mickey Mouse.
Yeah, exactly.
Costco. We love Costco.
We do.
Reported earnings $1.40. I love Costco's food. I love Costco's layout. I like their store. I like the way they run it. I like the way they bring their employees up from the inside up into management. Costco is just a well-run machine. $1.42, missed by 4 cents. You're going to miss every once in a while. This is one of those earnings calls that was kind of an average one when you just take into consideration how good Costco always does. $33 billion, beat the street by $280 million. Revenue numbers still significantly up, 10.8% year over year, down into earnings, $188.58 to close the week, up after earnings. Comp store sales, 8.4% increase. It's a great number. People expect more out of Costco than that for some reason. 11% increase in total sales. They're not even selling Kentucky bourbon.
No, they're not.
That's still got 11% increase in sales. What goes good with bourbon you can buy at Costco?
Chicken, I think.
Chicken and bourbon?
I think so.
Is that how that works?
I think so. Like when you say bourbon, I like barbecue chicken or something.
Barbecue chicken.
That's the first that
I don't think I've ever had bourbon.
It's good.
Is that another word for whiskey?
It's like no, I think there's a bourbon whiskey, but it tastes more like a scotch. I find.
I never had that either.
It's rough.
I'm a really pathetic drinker. I've had like 5 beer.
Yeah.
Like ever.
Yeah.
It's a sad state of affairs.
It's rough going down.
I'm 35 years old, but I'm just sure I'll be an adult shortly.
It's more of a sipping kind of a drink. I don't think you slam it back.
So Costco does have a good rotisserie barbecue chicken and a bourbon. So
Yes,
there you go.
yes.
So that's what the increase in sales I imagine
has to
is.
be, yeah.
You pick up your Kentucky bourbon and you pick up your Kentucky fried chicken or your Costco chicken in this case. 11% increase in total sales. Membership fee revenue, $716 million this year versus $636 million last year. That's up like $80 million.
Yes.
How do you grow $80 million? That's up like 13 or 14%. That's significant.
That's a lot. How many...
for new Costco membership.
Yeah, like
that's
where are
really
they coming from?
E-commerce sale 28.5%. As Costco obviously going to be a big box retailer, that's going to be the way it goes. But they do still do the e-commerce stuff. You can do your pictures and all that kind of stuff online. Pick up stuff at Costco. Right. But the e-commerce is never going to be the bulk that Costco is because it's a.
They have like a garage there too in most Costco's.
Yeah, you can't. Amazon's never going to install tires.
No.
Costco's got fuel.
Yeah,
that's
right.
Costco does a lot of good stuff. It's a good company. Good company. Yeah. Really at the top end of that price right now. Wouldn't be. We've done videos on this. Wouldn't get into buying Costco at the moment, but really tough to look at Costco and
love shopping there though.
Tough to see anybody that could be a competitor of theirs either. They really stand alone with what they specifically do. Finally, the last one, American Eagle, another retailer, 44 cents, in line with the street, $1.23 billion in revenue, beat by $20 million, up 11.8% year over year, continued growth. We see up revenue, up. Everybody was up on all the earnings calls from today. Everybody's revenue up double digits, except for Broun Forman up almost 9%. American Eagle down going into earnings, $19.54 to close out the week, up after the earnings call. 34% comparable store sales growth at Area. Area is one of the, isn't that like they sell like the earrings and all that stuff?
Like
isn't that what that is? It's
kiosk?
Like an accessory kind of store. And it's not a kiosk. They're usually like little corner ones.
What are they called again?
Area, Aeria. Isn't that what that is? I don't know enough about girls' stuff, but 34% comparable store sales growth for a brand that I've heard of that's been around for a while. Fairly significant. 8% across all the brands at American Eagle. So American Eagle and Abercrombie and Fitch continue to grow, much like we seen out of the Gap a couple of weeks ago. It was Area, what I said it was, a lot of accessories, right?
Yeah.
Bedazzling and doodads and all sorts of
stuff like that,
nose rings and stuff for my what's it Prince Albert.
Prince Albert,
yes. Got that into the podcast. That's the earnings for this week. That's the podcast number 20. I apologize, no Centaur rides.
No, I forgot all about that. Now
that would have been fun.
Yeah, I'm bummed out now. I know. Having a good podcast.
They got the real shaved upper body, but the hairy lower body and the hooves. And I imagine you could talk to them. I would imagine you could converse with these centaurs.
Well, I imagine.
Most of them, when you see them in video games, they have like a spear.
They're always trying to take you down.
They come in herds or packs.
Yeah.
I was hoping
they go up on their hind legs and try to like box you.
Yeah.
That sucked.
That's why we canceled the rides.
That's exactly.
It wasn't because budgetary issues. It was because nobody wants to get boxed by like a centaur that thinks he's a kangaroo.
Oh, exactly.
Get out of here.
Oh, that's dangerous.
So yeah, I'm Cody from Wall Street Breakdown.
I'm Anthony from Wall Street Breakdown.
Try not to get trampled by a centaur out there, and if you make it back next week in one piece, we'll see you again for podcast number 21. Have yourself an outstanding week.